The European Central Bank is expected to announce a major stimulus package on Thursday, along the lines of the quantitative easing program the U.S. relied on for 6 years. This as sluggish growth and fears over deflation continue to take center stage. But how can the ECB structure a package that works? Let's ask Brenda Kelly, Chief Market Strategist at IG Markets, joining us from London. And Brenda, can the ECB solve Europe's problems?
I don't think the ECB can solve Europe's problems alone. Clearly, there is a huge amount of debt within the Eurozone. Unemployment levels are still rather elevated, and of course, growth for some of the member states remains somewhat elusive. I think it will need a certain amount of government interaction and reform if we're going to see any changes to the Eurozone, which the ECB can help with, perhaps by adding some liquidity in order to allay some of the frozen credit conditions within the zone.
And how do you think the markets will react should a quantitative easing program come alive on Thursday?
Well, it really all depends on what type of QE we are coming to expect. I think for the most part, an amount of around 500 billion euros worth has more or less been priced into the market at the moment. And we're seeing that in the demise of the euro against the US dollar. And of course, the fact that the DAX and the CAC continue to run that bit higher. The DAX, of course, hitting record highs over the last number of days. So there'll be a number of characteristics that will really help to show what the impact of the overall effectiveness of QE, and that will be the risk sharing, whether or not it will be pooled and I suppose neutralised, or whether or not it will be apportioned to the individual central banks of the member states. And again, the size, given that it's been priced in, the 500 billion worth or thereabouts, you would like to think that a higher size would impress on the market that the willingness of the ECB to really regain price stability is in the offing. And of course, you'd have the composition of QE by asset class, by jurisdiction, and I suppose in some respects as a political thing, the degree of consensus from the different member states, particularly Germany, around QE. The markets appear to be front-running it for the time being, so there is a sense that we could see a sense of disappointment if Mario Draghi doesn't step up to the plate on Thursday.
But if we are talking about a larger bond buying program, as you suggest, how long do you think it will take to get results from that?
I think it will take a number of months. I think in some respects the ECB have been a little bit reluctant to get involved in this particular area because it is technically against their mandate. But ultimately, I think since the European Court of Justice has pretty much cleared the idea of OMTs, this has given them a clear hand to do it. Given where inflation is at the moment, and it is looking negative, practically deflation, it will take a number of months, probably 6 to 8 months, to see any sort of effect from it.
Right.
And of course, we want to know exactly whether it's open-ended and for how much as well. But it will take a while to make a difference.
And finally, if you're a U.S. investor, what do you do? How do you factor in Europe's problems?
I think you need to look at the Eurozone individually and not necessarily as a sovereign mass. And that is probably what sets the Eurozone apart. I think there will be opportunities owing to the weaker euro from the export-led countries. So the likes of Germany and Ireland and even the UK will be set to benefit from the move if we can continue to see the euro decline. So those would be the areas I'd be looking at, anywhere where the exporters will have a little bit of value left in them. But I think at the end of the day, we could see a little bit of a sell-off in the immediate aftermath of the decision, which could provide a better opportunity to get in.
All right, Brenda, we'll leave it there. Brenda Kelly, Chief Market Strategist at IG Markets, joining us from London. Thanks for your time.
Thank you.
I'm Scott Gamm, and you're watching The Street.